Well, if you can believe it, March is here, and I've got 10 stocks that I think are attractive at these levels and lower to buy in March. This is gonna be a rapid fire video, 10 stock picks in 10 minutes. I'm gonna give you a quick overview, a couple highlights of why I like each stock, and move on. Let's get started. Now, these picks are for long-term investing, holding for 5+ years, and they're not in any particular order. Now, Alphabet Google stock has been absolutely destroyed from the AI chatbot wars. And although Microsoft seems to have an edge right now, when you think of ChatGPT and the integration into Bing into Edge, you can't rule out Google as an AI company longer term, and I think Bard AI will figure itself out with time. Now, I own the A shares, that's GOOGL. You can buy the C shares, which is GOOG. Not much difference if you don't own a lot of shares. It's really about voting rights. The low in this stock, 52-week low, was $83.34, and the high in the 52-week was $143.79. It's trading right now under a 20 PE ratio. So that's trading around what the S&P 500 is, maybe a slight discount to the market. It's a mega cap stock, $614 billion market cap. When you think of Waymo, when you think of the search engine, you think of Bard AI longer term, you think of Google Cloud Platform and their drone delivery service and all the different things that they work on. I believe that Google will be a great long-term investment. With that said, there's risk with any stock that you buy. And Google Alphabet does have risk when you think of Department of Justice, antitrust. It also has risk with their search engine. And if we go into a recession, of course, advertising is going to slow down even more, and that could impact the stock. So it could go lower. But I like this stock below $90. It was recently in the high 80s. That's where I would like to buy it and dollar cost average if it does drop further. So check out Alphabet, ticker GOOGL for the A shares. Now, this video is going to have a blend of stocks, mega cap tech stocks. I got a couple dividend stocks, some smaller caps type stocks as well. I'm going to stick with the mega cap theme and go with Amazon. Now, I know this is a love-hate, bear bull type of a stock as well. The low on this 52-week was about $81.43, and it got to $170.83 on the 52-week high. This doesn't have a PE ratio. It is trading under a $1 trillion market cap. The primary reason that I own Amazon is going to be for Amazon Web Services, but of course, there are other many reasons that the company attractive longer term. Now, with that said, both Google and Amazon, they could have some more headwinds and they could see some more volatility. I just think these prices are attractive if you're holding the stocks for 5 or more years. So Amazon has everything from e-commerce. They're the largest shareholder in Rivian, so you get a piece of that action as well. Of course, that hasn't done very well for the company, but there are a lot of different growth trends that Amazon has its hands in, those different pots. So I like this one. It's kind of a conglomerate, tech conglomerate type play, just like Alphabet. Check out Amazon, ticker AMZN. Now, what's interesting about this next stock pick, Veeva Systems, it's a software as a service, SaaS type of a play, and it's focused really in the life sciences sector. They have a moat really when you think of life sciences. So you think of like a biotech company, a pharmaceutical company, taking a drug from idea to production to the end consumer. This software, ERP type software, is going to help those businesses achieve that goal. What is interesting about this is generally with SaaS, you're looking at EV NTM revenue. This has a P ratio, albeit an expensive one, at 66 P ratio, but this does have that recurring revenue. And when you look at the 52-week range, it did get close to $150. It was $151.02. 52-week high was $234. It's trading right now around $166. If you can get this stock close to $150 and you're thinking long term, it's a mid-cap type stock. It's a healthcare type stock. That's software, like I mentioned earlier. $25.8 billion market cap. I like this one as a long-term investment. The ticker is VEEV. That's VEEV. All right, small cap growth that has a P ratio around a 23. Now, this was a $46 stock in the 52-week low, 131 on the high. So it is trading close to that 52-week high, but the valuation is reasonable. It's a small cap at $4 billion. We were buying ACLS in Discord when this was a $1 billion market cap, so much, much lower. Now, I'd prefer this stock closer to, say, $120, $125 even, something like that. But at $130, if you're thinking long term, it could be a great investment. It has lots of room to run. This is a semiconductor equipment manufacturer. And what they do is they make equipment that, of course, produces, manufactures chips, semiconductors. And if you want more information on this stock, I cover it in more detail on a video, and I will put a card at the end of the video. That video covers my 3 favorite small cap semiconductor stocks. And while I'm on that topic, tomorrow I'm going to be interviewing a CEO of another small cap company that I just recently purchased that I've never talked about on the YouTube channel. This is a $500 million market cap. Make sure you subscribe and click that bell for notifications. You won't want to miss that CEO interview. It's about 50 minutes long and it's jam-packed with information about this company. So check out Axcelis Technologies. The ticker is ACLS. Now this stock we bought around $120. We sold it when it got closer to say $200 in Discord. 52-week range was 115.03. The high, 217. That's a big range. It's trading at $140 and it's getting attractive. According to Fidelity, Moderna has a 7P ratio, 6.93. A large cap here, $53.42 billion. Now, of course, you have to be mindful of earnings and things like that with all these stocks. And there's a lot of fear that Moderna is not going to be anything after COVID's gone. I don't think that's the case. I think they have some great technology and a great pipeline, and I think longer term, this company can do well. It is a riskier stock, so even though it is a 7P ratio, I'd probably buy it as a spec, and I would probably dollar cost average into it because the stock could go lower, but I do think it's attractive at $140. Check out Moderna, ticker is MRNA. Qualcomm is an attractive stock. It's a DGI type stock, DGIF kind of hybrid. 52-week range was 101.93 in the low, 172.99 in the high. It's trading at $124 today. This is only an 11.8P ratio with a solid dividend. The dividend is a 2.43% dividend yield. It's a large cap, $137.6 billion. I think the stock is attractive at this level. Of course, we know the bottom so far on the 52-week low was about $102. So it could go lower than here. I think I would dollar cost average. Anything close to $100, in my opinion, if you're thinking long-term, 5 years, I think you'll do well with Qualcomm. Check out ticker QCOM. This is going to be a spec stock. It doesn't have a P ratio. It's in the healthcare space. You think of biotech, you think of genomics, small cap, $3.87 billion market cap. 52-week range was 38.94 in the low, the high 86.95. I think this has a lot of upside long term. It's trading under $50 a share right now. And of course, if you want to play genomics and you don't want to buy individual stocks, you can look at something like an ARKG. That's the ARK ETF that's focused on genomics. But I do think this is one of the higher quality companies in that ARKG ETF. This is Crispr Therapeutics. Check this one out. Ticker is CRSP. This is another DGI, DGIF type of a hybrid, and the 52-week low on it was $230. So this has ran pretty hard because it's trading really close to the 52-week high. 52-week high was $471.51. This is trading at $470 today. But it is attractive at about a 15.5 PE ratio. It does pay a dividend of 1.28%, and it's a mid-cap, $32 billion. This is going to be more in the industrials, give you some diversification in your portfolio. If you're not familiar with United Rentals, so they operate as an equipment rental company. There's 2 segments, general rentals and specialty, and you can research more on your own. I think this is a $500 stock, so not a ton of upside here, but I do like this one if you're looking for some diversification within your portfolio. Check out United Rentals. The ticker is URI. Now, Target did report earnings this morning before open bell, and it was pretty good overall. Q4 non-GAAP EPS of $1.89 beat by 49 cents. The revenue of $31.4 billion, it was only up 1.3% year over year, but it did beat by $670 million. Comparable sales increased by 0.7% on top of 8.9% in Q4 of 2021, driven entirely by an increase in guest traffic. Now, this isn't a dirt cheap stock, but it's not crazy expensive. It's about a 23 PE ratio, and it pays a nice dividend, 2.59% dividend yield, large cap around $76 billion. The 52-week low on this was 137, the high 254. It's trading at 170. So Target stock, I think close to 150, even lower would be even better. But that $150 level would be a perfect level, in my opinion, to kind of back into this stock, and it might not get there. And with all these stocks, I'm talking about long-term investing and dollar cost averaging. If I'm giving you a price. It may or may not happen, and it could go even much lower than what I'm saying. I'm just looking at Target at even at $170 and saying longer term, this could be an attractive play. It's not going anywhere. And if you look at where it's been, it was much higher at one point. You know, if you look back to November of 2021, this was like a $267 stock. And I think eventually it'll get back to those levels. They've had some issues with inventory. And of course, the overall economic conditions have been impactful to their business. But I think they'll see the other side of this, especially if we don't see a deeper recession. So check out Target. Ticker is TGT. I've got one stock left, so stay tuned, and this is a hyper-growth stock. Before I go on, I need to announce this video is sponsored by The Motley Fool. If you'd like to see the 10 best stocks to buy now, visit fool.com/firedupwealth. You can also join our private community and Discord by visiting patreon.com/firedupwealth. This last pick, I would consider this spec. Now the 52-week range was $38.31 to $122.24. So this could go down further. I have this on my watch list if it gets closer to $75. Now it may not get to $75. This is a medium cap, $6.86 billion. No PE ratio. It's a price to sales type company. And you can see it's not cheap. It's trading still at a 12.46 price to sales. And when you think about Celsius, there are a lot of other companies that make energy drinks. Now the bulls are going to tell you that the proprietary blend that Celsius has is second to none. But even like Dwayne Johnson, The Rock, he has his own energy brand called Zoa Energy. And although the companies are different, they both claim to be healthy and better for you than the average energy drink. So I'm not hating on this. I'm saying it's an opportunity to potentially buy this stock. I would want to buy Celsius lower, close to $75, and I would consider it spec because it doesn't have a moat and there is some risk there. That's my opinion. If this video is helpful, make sure you subscribe and click that bell for notifications. Make sure you drop me a like and drop me a comment. Let me know, do you think these stocks are good buys here? What price would you buy them at? Drop me a comment below. I appreciate your time and attention. Have a great rest of your day. Take care.